Let's first start off with how the Asian markets are faring, and based on how Wall Street fared last night, it is no different. The Taiwanese index is down 1.5%. The Hang Seng is down almost 1.75%. The underperformance is also coming from the Kospi, which was the outperformer all through last year. 3.5% lower now on the Kospi. The South Korean benchmark, at one point it was down almost 5%. The Nikkei too trading with losses of around 0.5%. The Shanghai Composite down 0.7%. So it's a red across the board for the Asia Pacific markets as well. Maybe not as bad as what Wall Street was, but it is a red nonetheless. Pull up the GIFT Nifty and it is no different from what the Asian screen is looking like. But compared to the earlier ticks, which were indicating a 130, 140 point gap down, for now the implied open is suggesting a 100-point down tick as we speak. Some buying emerging at lower levels is what the bulls would be hoping for. But to set you up for this final trading day of the week, we are here to tell you the trade setup, the stocks that you need to keep an eye out for, and of course what's lined up in all things F&O. But the Nifty, as of now, is indicating a gap down start. 100 points lower is what the GIFT Nifty is suggesting. So which means we will open possibly around that 25,500 levels. And the Nifty has been making lower lows, as you can see, after that 1,200 point gap up on Wednesday. On Tuesday, it had a lower high on Wednesday, another lower high on Thursday as well. So it is not managing to catch up to the previous day's intraday high, and that is because at one point on Wednesday it was the index heavyweights that lent some support to the index that was absent in yesterday's session. So all of those heavyweights that lent support were on the losing side this time around, be it Reliance, be it ICICI Bank, and a lot of these, and that is what dragged the index lower in yesterday's trading session. But the index to watch today is going to be the Nifty Bank. That's of course because of the RBI policy later in the day, and like the Nifty, it is also managing to defend those levels of 60,000. We'll keep an eye out on that. Again, more than the status quo policy, the liquidity management decisions that the RBI is going to take, that's going to be key. That will be a determinant for the Nifty Bank and in turn for the Nifty as well. There was another round of selling on Wall Street overnight, so the IT stocks have to brace for that as well. The FII selling has resumed after 2 days of buying, so keep that on your mind as well. And of course, earnings reactions, the positive earnings reactions aside, the negative earnings reactions have been on the extreme, as was evident from stocks like Tube Investments and Hexaware yesterday. Of course, keep an eye out on the commodity sell-off, and 25,750 and 25,800 on the upside, some key levels to watch on the index. And on the downside, keep an eye out on 25,500. But for now, the GIFT Nifty is pointing towards a gap down start for our own markets as we speak. Now over to Ria, who will list out the stocks that you should be watching out for today. Ria, good morning. What's on your list?
Well, good morning, Homers. Lots of Q3 numbers to watch out for today. The first one is Bharti Airtel. The net profit for the company has gone down by roughly 2.5%, coming in at 6,630 odd crores, and this has been impacted by the new labor code, roughly 257 crores of an impact here. Revenue has seen an increase of roughly 3.5%, and the company has also added roughly 4.5 million subscribers in this quarter. For Tata Motors PV, the revenue has come in at roughly 15,300 crores, slightly below estimates of 16,100 odd crores. Volumes have seen an increase of roughly 22% on a year-on-year basis, and market share has gone up by roughly 100 basis points sequentially for the company. For Hero Moto, inline set of numbers here, revenue coming in at roughly 12,300 crores, margins at 14.7% in this quarter. For Astral, the net profit has seen a decline of roughly 5.5% on a year-on-year basis. Revenue, however, has seen a healthy growth of roughly 10%, and the volumes in the plumbing business have gone up by roughly 16.8% on a year-on-year basis. For NCC, the net profit has seen a decline of around 37% compared to the previous year. Revenue has also seen a decline of roughly 9%, and the company has also withdrawn its revenue and margin guidance for the year. For Hitachi Energy, the revenue has seen an increase of roughly 28%, coming in at roughly 2,082 crores. Margins have also seen a very healthy expansion at 16.6% versus roughly 10.3% in Q3 of last year. For Mazgaon Dock, net profit and EBITDA both seeing an increase of roughly 9% on a year-on-year basis. Revenue growth also remains quite strong at 15% on a year-on-year basis. For Nykaa, the net profit has come in at 66 crores versus just 26 crores in Q3 of last year. So big jump there. Even the revenue has seen an increase of roughly 27% compared to the previous year. For Keynes Technology, net profit has come in at just 77 crores versus the estimates of 106 crores that we were working with. Even the revenue has been below estimates at 804 crores. Lastly, Physics Wala has also reported its Q3 numbers. Net profit seeing an increase of roughly 10% compared to the previous year. Revenue has also gone up by roughly 34% for this one.
Riya, thank you for that update there. And over to Mangalam now, joins in with cues from the FNO space. Mangalam, good morning. What's the data indicating?
Good morning. So the data is indicating that perhaps the post-India-US trade deal rally has more or less fizzled out. Yesterday, there was weakness in the frontline indices as well as the broader markets. But the only glimmer of hope is that yesterday's low was pretty close to the previous trading session's low. And to that extent, we have some support at lower levels. The FII flows, they fizzled out in the cash market. After buying 5,000 crores post the trade deal announcement yesterday, they did not sell. And then today, as we go into trade, they have sold about 2,150 crores in cash. And similar is the case with reducing purchases in index futures. They've begun to cover short positions, but they've now yesterday also unbound some of the long positions. So after buying 6,800 crores, 1,800 crores, yesterday the purchase was just 500 crores. And the FII longs, which were at 19% day before yesterday, are now at 19% as well. So a large part of that up move has happened via short covering. Now, with the market being what it is and the GIFT Nifty indicating a lower start, the put writers are active at 25,600, call writers are active at 25,700. That tells you that the range that the Nifty is hoping for is 25,500 to about 25,800. And that's exactly where the technicals are as well. We are at the 100-day moving average, which is between the 20 and the 50-day moving average, and that's the large range. Today is RBI policy, so the Nifty bank will be extremely crucial. Yesterday, it did not fall so much, held above that 60,000 mark. 59,400 to 59,500 is a crucial support zone for the Nifty bank. Finally, looking at stocks, Nykaa reported a great set of numbers post-markets. A lot of long positions added out there. Also longs added on Jubilant Foodworks and Page Industries.
Mangalam, thank you for that. We'll keep an eye out on those important levels on the index and, of course, the Nifty bank as well.